Today, we're going to talk about the real reason Tesla is going up higher and higher and higher, and it has nothing to do with their cars. Next, Opendoor just got a new CEO. What does that mean for the stock? Is it going to continue its meteoric rise? And lastly, Oracle might be buying your favorite social media platform, causing a stock price to skyrocket. So let's start first with Tesla, right? The reason Tesla shares are climbing has nothing to do with its cars. Investors are seeing a move as a turning point, but Tesla's fundamentals and Musk's distractions still raise questions. So I was saying this yesterday. I really feel like if if Elon could focus in, he could really make some tremendous gains, not just in Tesla stock price, but in Tesla innovation. But this article goes on to say, on Monday, Tesla CEO Elon Musk announced that on the previous Friday, his family foundation purchased 2.5 million shares of Tesla in various tranches throughout the day, with a total price of close to $1 billion. So let's go look at the Tesla stock price real quick. Let's see. What happens when you take 1 billion shares out of the market, right? When people are selling, or I'm sorry, when you've got 2.5 million shares that need to be bought, this is what happens, right? This is what is called supply and demand. Hey, you know what? If you want to buy these shares, it's going to cost you. Boom, rocket ships higher. So, in fact, we're still sitting on that buy signal that came August 12th in the swing signals inside of OVTLYR. And of course, it's pushing up higher and higher and higher. Following the news of Musk's Friday share purchase, Tesla stock rose on Monday, and it's up again yesterday when this article was written, and it is up again today. But I see some huge overhead resistance right here. A lot of people who were holding Tesla stock all the way back in January are very excited because, hey, thanks to Elon, I'm back to break even. I bought it right here. I didn't personally buy it, but there's a lot of people who bought it right here thinking, oh, you know what? I'll buy the dip. I'll buy the dip. Oh, wait a minute. The dip dipped on dipping for 8 months. And now I'm finally back to break even. I might just be ready to sell my shares. So look for a lot of overhead resistance over the top of this on Tesla. In fact, let's go to Tesla inside of OVTLYR here. We do have the buy signal, but we do have those outlier blocks right on top of it. That's going to really be holding it back. We are 5 out of 9 on the OVTLYR 9, and the sector is not helping at all. Tesla is a discretionary stock. It's not a tech stock, even though you might think it is. It's not. We're getting more and more sell signals in this sector, and the fear and greed on average in the sector is going down. So if the stock itself is outperforming like this, it's not with the backing of the sector, which is going to lead to potentially some issues. Now, I like to say that 40% of the move is due to the market, 30% is due to the sector, and 30% due to the stock itself. So the sector is not helping out 30% of it. So you may have 70% working in your favor, but let's take a look at the market. Let's take a look at the market. SPY still sitting on a buy signal. And if we look at SPY, it hit a little bottom right here and is starting to get more and more greedy. How about that? But the trend of the market continues to push higher. In fact, I think we hit new all-time highs again today, didn't we? Yeah, new all-time highs hit once again today on the SPY. And I saw somebody posting in the Discord, we got new highs on the SPY. Why are we being cautious? I'll show you exactly why we're being cautious right here. Market breadth going down and down and down and down. I'm telling you, this market's getting propped up by fewer and fewer and fewer stocks. That is a very nervous market. That's a very twitchy market. What you want is market breadth, all the stocks getting those buy signals, all the stocks pushing up higher in their own trends, the sector's pushing up higher. In fact, one sector is bullish. Every other sector is bearish. So by all means, follow your trading plan. That's what I would say is follow your trading plan. And I'm not putting any money at risk right now when I can see using OVTLYR, using the data that we talk about every single day. We've got a giant pullback underneath the surface. And it's only a matter of time before this catches up or breadth turns around and then we push even up higher. That's my opinion on Tesla right here. So let's go to the next stock. Opendoor. Opendoor just got a new CEO. What does that mean, right? So about a month ago, Carrie Wheeler stepped down and they overhauled their leadership team and they just tapped Kaz, Mr. Kaz. I'm going to butcher his last name, so I'll give him some respect and give him Kaz to be his new CEO. Mr. Kaz was the CEO of Shopify, one of the best regarded tech commerce platforms. And before that, a founder of a payment technology company, Cash, which was sold in 2017. So dude's been in the tech space for a while. It makes total sense that they would want to have somebody like that leading the helm here. So Mr. Kaz seems to be a good choice to fill the CEO role. After all, Shopify has been a leader in the e-commerce software for more than a decade. He helped roll out some of the company's new AI tools. AI is a key focus of Opendoor as it attempts to revamp its product and its businesses. So I've got a little experience with Opendoor. When my mother-in-law passed away a couple of years ago, this is when interest rates were really, really high. They've come down since then. We as a family agreed, listen, we're not going to try and fight it. We're not going to get a real estate agent. We're not going to try and deal with the market. We just want to get this out of the way. And so we used Opendoor, and it wasn't like as much as the real estate market would have been able to pay. But you know what? The liquidity was there. We were out of that house within 25 days. It was really, really, really easy. And for that, Opendoor absolutely has a place in the market. If you need liquidity on that house and you're not too concerned with getting top dollar, boom, go for it. Now, looking at Opendoor as for the stock, right? We've got a buy signal that came through on what was this, September 9th? Let's go to Opendoor real quick. Oof. All right. So I drew a big arrow right there yesterday. Opendoor, there's that buy signal that came through. As of right now, it is up 45% with a huge order block, a huge years and years old order block from February 2022. So a 3.5-year-old order block, right? This order block is old enough to be in preschool at this point, and out of diapers. That's how old this order block is. And I'm telling you, this makes me super nervous, right? I don't give a lot of credence to a stock that's had a big move like this, a big meme stock type of move. And if we go into OVTLYR, right, we can see the sector, the real estate sector, is not helping it. However, the stock itself, the trends in place, the buy signals in place, getting more greedy still, and the OVTLYR blocks, it's still got more than 2% space. That's our limit. So it's got more than 2% space up to there. But to me, this looks like it's going to be a victim of the 50-80 rule. And you've seen this time and time again. Think of GameStop. Think of AMC. Think of HIMS, right? Think of all kinds of stocks that you've seen move like this. Most people have no idea how to get out of a stock and keep profits, right? They're going to hold it all the way up. They're going to hold it all the way back down. And then they're going to make their own Reddit channels and say, oh, just get ready for the mother of all short squeezes. It's coming soon, blah, 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 right? These people get anchored to a stock and they hold it for years. And then they just waste all that time and money and energy when nothing's really happening. So be objective, date a stock, don't marry a stock. And a stock like this, like I said, I think it's going to be a victim of the 50-80 rule, which is 50% of the time, a stock like this goes down 80%. And 80% of the time, a stock like this goes down 50%. But you might want to be looking for, as Ben says, a stage 3 exit. We just saw a big, beautiful, giant trend right here in a stage 2 uptrend. Stage 3 is when these moving averages start crossing around and it starts closing underneath the moving averages. And you'll know it. You'll know it if it starts to pull back. Let's go to the next stock. The next stock on the board is Oracle. Oracle could be buying your favorite TikToks. Oracle could be out there swiping up all day long. Man, I saw some videos the other day and talked about how bad for you short form content is, because like it just throws it at you. There's no intent for you, right? It's not like you're searching out something. It's not like you are sitting there investing into a particular video like you're watching this one right now. It's just like dopamine hit, dopamine hit, dopamine hit. And we went to a Friday night football game last Friday here in Texas, which of course is a big deal. And I saw some children out there, and it really bothered me because these children, one of them was probably middle school, one of them was probably 6, something like that, just sitting on their parents' phone, scrolling Instagram Reels, scrolling TikTok, while this, like, the whole production, the whole event, everything that's supposed to entertain people is right there in front of them. Like, this is what you came for. And yet, I'd rather scroll. It was disturbing, honestly, watching this. Yeah. So anyway, short form content, I don't think is all that great for you, but it definitely is all that great for Oracle. Oracle is up bigly lately. Let's go look at Oracle stock, ORCL. Yeah, up bigly after this earnings right here. But again, we've got some issues here with this order block. Now, this is a really young order block. It's only a couple days old, but it might prove to be some resistance. People are looking to get out after this big move up. Let's take a look at Oracle in the platform here. Still has a buy signal, and the tech sector, the rising fear and greed is helping it out. It has a bullish trend, a bullish signal, bullish fear and greed, and it's got at least 2% move to the upside. Oh, actually, it's sitting right inside this order block. So I probably got updated today and should be in the platform by tomorrow. But Oracle, man, I tell you what, this is a high flying stock right now, but does it have the support behind it, right? It's up a staggering 81% year to date, and it's up over 5.5% at the time of this writing. And then Trump even made a Truth Social post. Let me read it in Trump voice. The big American trade meeting in Europe between the United States of America and China has gone very well, beautifully well, incredibly well. Of course it would, because I'm facilitating this trade. It will be concluding shortly. A deal, an amazing deal, a tremendous deal has been reached on a certain company. You probably know what it is. I know what it is. Of course you know what it is, because you're smart, right? You're smart, you're beautiful. And it is going to the company that young people in our country love very, very much, and we wanted to save it. We will be very happy, and I will be speaking with absolutely stupid, unbelievably dumb President Xi in China the other day. So what I'm trying to tell you right now is go buy Oracle stock right now. That's what Trump said. I didn't say it. So anyways, Oracle stock looking like a high flyer right here. But if you are in Oracle stock, be sure you know where you're going to get out. So speaking of knowing where you're going to get in, where you're going to get out, let's go through the trading plan today. So of course, it always starts with the market. We want to make sure that we have a buy signal on the market, and we have that in place right now. And the trend is absolutely still pushing up higher. We've got a green bullish background right here, which means we are in a big, beautiful trend. However, as I mentioned earlier, the breadth is not helping whatsoever. Yeah, it's like we were right in the room with Trump right there. It was amazing. I don't know how. I just embodied him. It just happens, right? It just happens. So for me, I wouldn't be trading this. A couple of reasons why I'm not trading right now. Number one, we have hit the ceiling, the SPY, fear, and greed. We want to see the SPY, fear, and greed under 70. Now, this is the longest time that I can have. Hang on a second. This is the longest time that I have seen when looking back at all the data inside of OVTLYR as to when it's been above 70. Look at how long it stayed above 70 and only slightly came down. You can see it peaked up and came down, peaked up, came down, peaked up, came down. This has just been an exaggerated, slow burn right here over 70. And only came down for like 3 days, and now it's back above 70. So that's not what I want to see. I want to see a market where we're pushing up higher and higher and higher into greed, right? We can kind of see right there what that looks like when the greed is, or when the fear is high, pushing up higher into greed. Boom, that's what we see. Not the case right here. So if you've been struggling for the last couple months, one of the reasons why is that people are losing their greed, and the greed has been just so elevated. It's like if everybody was going to buy, what's left to everybody who's already bought? They're going to turn into sellers. So I'm not calling for any sort of crash anytime soon, but I am saying that because the risk is elevated in the market right now, Chris is just going to sit in cash and not F up his portfolio. So thank you so much for coming today. Listen, if you want to save time, make money, start winning with less risk, click one of these two videos and have a fantastic day. We'll talk soon.